They're like half a
We
minute.
live, you guys. We are live.
Right.
It's Friday night, and we're in Oakland, Bay Area. I have some heavy hitters, some insurance heavy hitters at the table with me. They're gonna educate us. So, welcome you guys to Samantha Wise Words. And tonight we're gonna talk about insurance, not just life insurance, not a burial insurance. We're gonna talk about different types of insurance. And so, I solicited the community to say, who do you want to hear from? Who is your insurance heavy hitter? And people start just throwing these names at me. And Juavette George came, because she's the person who I have my insurance from. And her name just kept popping up. And that tells me that she has the knowledge and people trust you. And then Michael, your name came from some of the guys, some of the people from the streets. They was like, Michael know what he's talking about. Michael Swanson Jr. I'm like, who is Michael Swanson Jr.? And I know me and his mom went to school together. So after I talked to him, I was like, okay, this young buck knows what he's talking about. He knows what he's talking about. And then this lady right here, look, I don't know where we got her from, but I just remember, she came highly recommended by DB, so I know where I got her from. But I remember me walking in my community, and this lady would always come up to me like, Samantha, and I'm like, lady, I am not buying no insurance. I don't want to hear it. But I think I can maximize the 401k. I can tell you about annuities. And I was like, I'm good. I don't. And so when we had a chance to talk last week, and she was telling me who she was, and she was like, I see you in the community all the time. And I'm like, you're not that lady. Are you that lady? And she was like, yeah, I've been trying. I've been trying to talk to you, whatever. And so she got my attention. We did talk about some numbers. She laced me with some game that I didn't know. And so whatever I learned, I want to make sure that you guys learn. And there are some misconceptions about insurance. Mm-hmm. Insurance is not about burying me, right? No. I think the people, Black people or people of color, I think we got it all mixed up. I want to have a millionaire mindset. Yes. And the only way some of us can become millionaire, we're going to work really, really hard, and then we're going to pass away, and then there's not going to be nobody available to give the money to. Yes. Or we can start thinking like the millionaires, right? Right. And one thing I know for sure, we're going to live, and what's going to happen? Then we're going to die, right? There's nothing, we can't run away from death. Right. We can't run away from death. So in the meantime, we had a policy, my husband and I, we had a policy for our mothers. So we waited for them, and they didn't renew their policy for some reason. They had it when they were 18 or whatever, and then they were paying like $10 a month for their insurance or whatever. But some kind of way they let it lapse. And so my husband and I, we decided like, if they pass, it's gonna be all on us. Yes. Regardless, it's gonna be all on us. And so we didn't know. We just like, okay, we just want to have enough to bury them. We knew they were gonna be with us forever. So we figured like we have enough to bury them, so we don't have to do what is that they be doing on when they ask them for money. I didn't want to, I can't call myself this successful Black woman or this leader in Oakland. I got to go on Facebook. And there's nothing wrong with doing a GoFundMe because you need it. But I just didn't want to do that. If I can go out to eat, or I can have a cocktail, or I can kick it with my partners, or I can buy some new shoes, I can pay for insurance from my parent. That's right. I think it's making a sacrifice now so that we can be greater later. Right. And so I do regret the part that I wasn't fully educated on insurance. Because like I said before, one thing for sure, we all gonna pass. Mm-hmm. But I think what I know is I should have maximized what I knew. I should have increased my knowledge of insurance. I should have maximized it to the point where maybe I could have gotten $1 million, not to hope that they were to die, but I think protect them. Like my mother died. We were able to get her stuff together, without a problem. Mama died on a Tuesday, her funeral was on a Thursday, which means everything was in order as far as we were concerned. But she did have a house. She did have a lot of stuff that we had to pay for in the interim after she passed. And, we spent all the money on the funeral. We had a couple dollars left after the funeral. But just think if she would have had a husband or a kid or a house or whatever, how was I going to be able to maintain my house plus take care of her house? Or how was that going to pass down? So I'm going to briefly allow them to, y'all see how I be talking. Huh? I'm going to go ahead and start on the end with the gentleman. We're going to have Michael introduce himself to you guys. And I want him to tell why he's passionate about this process of people getting insurance, or his people, our people that look like us, insurance.
My name is Michael Swanson. I'm currently a licensed sales agent with Allstate.
The reason why I'm so passionate about it is one reason is what you brought up, the GoFundMe's. I've seen so many people struggling to bury their loved ones, struggling to keep life going after their loved ones, the breadwinner of the house, or somebody who's helping with finances passed away. So I dove into it, and I researched it before I got involved, and it was just something I was passionate about. I'm like, dang, you can really go far with life insurance, just life insurance. If people don't understand how important it is. So when I dove deep into it and realized how important it was, I was just dedicated to getting our people involved in at least getting some policies going.
I appreciate that. Juavette, do you want to do an introduction?
Yes, my name is Juavette Johansen. I have been in financial services for about 10 years now. My background is actually real estate. I have my own real estate company, Bridgeway Realty, for about 18 years. And I got involved with life insurance on a personal note. I married my husband in 2009. And 5 days after we got married, he was diagnosed with terminal cancer. And, we had nothing prepared at all. And even though we made money, we made very good money, we didn't save money correctly. And so Michael lived for about 1.5 years after he was diagnosed. And when he passed away, I remember being in my living room and saying, oh my God, it's just me. I don't have a husband. My kids are in college. And like a lot of women, sometimes we forget to take care of ourselves. And so I got involved to help myself. And as I was learning, I was like, oh my God, we need to know this. Our community needs to understand how life insurance is not about burying somebody. It's about creating a legacy. And so for me, my whole mission in life is generational wealth, whether it's real estate, life insurance, whatever it is. Like you said, it starts with the mindset of saying that it's not about me. It's about my kids. It's about my grandkids. How do we pass this down so that, when they come up, they can buy a house, without a struggle. So for me, it was definitely personal.
Okay. Or college. They can go to college.
Exactly.
Right. I just think that, we all shouldn't have to start from the bottom.
Right.
We all should have to scrape and figure things out. It should be that information should be readily available to us. And now with the internet, we really don't have any excuses. Or now with people in our community, people start walking in here and you start telling them about your insurance and the packages and so on and so forth. And I know you are really into the system as well. And then Michael, we got to make sure that, this wealth, I think you're the newbie at the table.
Right.
So you're going to be able to get some game from them just like I am. So we're going to have Ms. Akbar grace us with her presence. She's here, but she's ready to talk, y'all. Come on.
Well, first, I just want to thank you, Samantha, for inviting us and also for having this topic. I think this is so important that we share this information because no one ever came into our communities and taught our families, our grandparents, how to purchase life insurance. And I have a question for all of you. Why do you think the American insurance agents used to walk through our neighborhoods and share with our families term insurance only?
They knew it was going to tap out. I mean, now that I understand the verbiage, it's only for a term. So you're going to pay it for all those years. And then if you got a 20-year policy and you 20, by 40, it's no longer good, right? Or it doesn't. So that's what I need your help to understand. So
you're on the right track, of course. And then, of course, you're a lot older. So insurance is going to be more expensive. And you may have ailments where now you don't qualify.
Right.
But that wasn't exactly why. See, they knew we needed to bury our dead, for sure. They didn't want that money to have to be coming from the state. And then the insurance agent needed to make a commission as well. But they didn't want us to be wealthy.
Come on now.
And so because they didn't want us to be wealthy, they gave us those $20,000 policies that was only going to leave a few $1,000s left. And then what happens? The family now has to sell the home, sell the business.
Right.
Now the family's left with nothing and everybody has to start from ground zero again.
Right.
But at our company, Pinnacle Elite World Financial Group, we actually put life back into life insurance. See, people think insurance is made for if somebody dies, then you can bury the dead. Yes, that's called death insurance. We have a wonderful final expense plan that actually comes with a concierge service. The concierge comes in and takes care of all the final arrangements for the family. But that's just not it. We have a policy and a plan that you can get that now you actually become your own bank. So instead of going to the bank and getting in debt or taking money from your credit cards, you can take money from your plan. And as you're paying that plan back with your monthly premiums, Now you're actually gaining the interest in your plan. So not only are you building your credit, you're building your generational wealth for your family. Then we have illness riders as well. So if you get ill, you can use that money for your sickness. If you lose 2 of your 6 daily living tasks, you can't bathe, dress, eat, change, transfer, continence yourself, then you can take a percentage of the plan so that you can take care of your health. You can have a nurse come in and take care of you while you convalesce, or you can go to a facility and have that income. Everybody doesn't have FMLA or PTO or sick leave.
And so, what the name of that what they call the illness plan?
It's called living benefits.
So, living benefits. Okay, so what I want you guys to kind of explain to the audience is, there's term life, there's whole life, there's universal life, there's variable universal life, and there's index universal life. So most of the time, people are buying either term or they're buying whole life. Do you want to explain the difference between the term and the whole life, Michael?
So term is also usually what you get when people say, "Oh, I got insurance at work." Is more than likely a term plan. But the term plan is exactly what it sounds like. It's only good for a certain term, for a certain amount of time. So if you get a 20-year term, after that 20 years, then you're done. The policy's done, and you gotta apply for another policy. You gotta be re-rated at your new age, and like she stated, you might be a little more sicker. You're a little older, so rates are higher.
And then you may not qualify.
You may not qualify, right? With a whole life plan, it's for your whole life.
Okay.
So it never runs out. I know with some places it's different. I know at Allstate, you can cash out when you're 99. So it goes to your 99, and if you live to your 99, you can cash that whole.
So you gotta wait till you're 99 though?
If you go with us,
not with ours.
So there's different levels to the game then.
Right.
So Allstate is more corporate, right?
Yeah.
And so okay,
and also, and then also there's pros and cons to each one. And I agree with you. It's all about education.
Yeah, it is.
People need to understand that, like you said, we were sold term and whole life.
Yes.
Well, there's other types that are out there. And so when we talk to people, it's all about education. It's term. What's good about term? It's inexpensive.
Right.
Okay. What's bad about term? It will expire eventually. There's no cash value in term. Term is just for protection. Right. Now, that does not make term a bad thing. Right. Okay. As a realtor, when somebody buys a house and they have a 30-year mortgage, okay, I always say get a 30-year term for the amount of your mortgage. Because what if, say, God forbid, during that 30 years, I get cancer. I can affect my living benefits and pull out money, pay off my house.
There you go.
If within that 30 years I pass away, my kids can use that policy because it's less expensive to pay off my house and I have more coverage. So term is not a bad thing, you guys, but you have to know, why do you have it? I have term and permanent insurance because I have a mixture of the two, because I have a term for my mortgage and I have permanent for myself. So I don't people think that term is bad. It's not bad as long as you know why you're getting it.
And
so go ahead.
I always tell people, because I deal mostly with millennials, so 21 to 35, and a lot of times when you're just young, your cash is strapped. So I always tell people it's good to get something. Get something. I ain't got enough money. It's good to get something. You can get a term life insurance policy for cheaper than the Metro bill, and a lot of people don't know that. So get something, just in case something happens to you, your family's not struggling to hold.
And also with term, you can also convert it, later on to permanent as well. Yeah. So, with some companies but some companies can actually convert that term to a permanent after 1 year.
So my thing is, so when you say you can go to term and you can convert it to the whole, but to permanent, does that mean that you have to go through being tested, so on and so forth?
It can be.
Okay.
It can be.
Okay.
And not only that, it comes with high fees because you have to pay for this new plan. And so it's extremely expensive to go from term to perm after 30 years, because guess what? You're in your 70s.
After 30 years, yeah.
Yeah.
But you may even after 1 or 2 years convert it to a term. I just want people to know that they have options.
Yeah, they do options.
I'm not saying it's good or bad, but I'm just saying, I think my biggest thing with people is that educate people on all the facts.
Yes.
People are very smart. They make their own decision. Right. But I feel like you said, if they don't just about term and whole life, that's not right.
Well, and I'm like you, though. Term is amazing because we have term with living benefits.
Correct.
So what does that mean? That means that, like I said, if you lose 2 of your daily living tasks, then you can't pay off your mortgage. I do the same thing. I have several realtors on my team, and that was one of our main features. Because term is more reasonable. And so, like she said, you want to make sure you know why you're having these plans.
So I think the insurance people, say for we had this guy come to my house and he sat in my grandmother's living room when we had babies. Grandma said, put your kids under insurance. We didn't ask no questions. We felt like grandma would know what was best, so on and so forth. So we were paying. I think I still have my kids' policy, and they're 30-something years old. And so, I've added to them. So term is like renting and owning.
There you go.
Right? So
exactly.
a term is like a rent. Like, am I going to rent the rest of my life, or am I going to own something? Because when people tell you guys to go, you got to go.
Right.
So if somebody is an owner or of this policy and they're saying your time is up, you gone.
Right.
And then all the money that I've contributed went down the drain.
Right.
So I don't get nothing from it.
Yeah. And I will say this, I don't consider it like that. I look at it like car insurance, you guys. Every month you pay your car insurance, whether you get an accident or not, right? You get your car insurance. Life's the same way. It's for the what ifs of life. So I don't see it as like, down the drain. It was there for what if. And maybe because, for me, you guys, my husband, who was totally healthy, what's the doctor? You have 6 months to live. Wow. We don't know from today or tomorrow what's going to happen. So for me, you guys, it's for the what ifs of life. Just like you pay your car insurance, your homeowner's insurance, you pay it every month. If nothing even happens, you guys still pay for it. We need to understand, you guys, that life insurance is just as important as your car and your home.
And your cell phone.
And I
think that is the mentality of people in my community.
Yeah.
They much rather we spending $1,000 on an iPhone and then we make sure that it's covered. But I'm worth way more than an iPhone. And so if they're charging me $50 to cover my iPhone or whatever it is monthly, I don't know, it's automatically deducted.
Yeah.
But I'm more, my generation that's going to come after me is worth way more than this iPhone. So I think that we as a community need to stop dealing with the foolishness of insurance and be real about ourselves. But if you covering this phone, you should definitely have life insurance.
Right. Yeah.
And so I heard, even somebody in my family just told me the other day, well, I don't have no insurance. I'm going to get her signed up on insurance because if something were to happen, then I might still have to pay for it. Right. And so I'm going to start hosting these insurance parties. Mm-hmm.
Good.
I know it sounds crazy. It sounds like I'm jinxing somebody, and I'm not jinxing anybody. But I just want us to be prepared. So, like I've told my brother, I've told my all my siblings, and some of my girlfriends, like y'all can put me under y'all insurance if y'all want. I'm not gonna pay it, but y'all can put me under y'all insurance because in the event that something happens to me, which one day it may, there's a legacy.
Yes,
I want my family to be rich. Yes. I don't want my living to be in vain. Yes. I die and I leave y'all with the bills, or I just wasn't educated enough to make sure that y'all was taken care of. Yes. When I die, I want my grandkids to be millionaires. Yeah. Not that they gotta work, scraping the ground and starting from the bottom. They should be automatically millionaires because that's where the generational wealth comes from. Yes. And I think a lot of time that's what the Caucasians did. That's why they're rich. That's why they walk into money. Yep. Because these insurance policies. Yeah, absolutely. And one thing for sure, and as I said before, you gotta die. Yeah. And why do we feel like it's a jinx? I don't know. Why do we feel as that, you get a policy on me, you jinxing me?
Why? Because it's our relationship. It's those messages. It's our belief system. Mm-hmm. For one, when we're talking about whole life insurance, it's a book called What Would the Rockefellers Do? Mm-hmm. And it shares with why the Rockefellers are one of the richest and wealthiest families today. Why? Because they use whole life insurance to build their wealth. Now, whole life insurance is only growing at a 5 to 7% interest rate. But if you imagine, if you're doing an index strategy and you're really building your wealth, that's that legacy you're talking about, Samantha. That's that generational wealth that you're building. So we educate families on how to go from good to great.
So you speak about this index. What is this index that the insurance agencies or the insurance offices go by?
Yes. So index grows at a compound interest rate. So if you're looking at the banks give us 1%. They don't even give us 1%. They give us 0.01% interest. But if they were generous and gave us a penny on the dollar, then guess what? We would be, if we put $10,000 in the bank at age 29, it would have to be, using the rule of 72. it would be like 72 divided by 1%. You'd be 72 years later,
Right.
you'd be 101 before your 10,000 matured to 20,000. So now, if you're looking at
That's too long.
you know, who has time? And then when
That's
you
the
just
bank.
said, when you just said you could take the money out when you're 90, I'm like, what could I do at 90, right?
Right.
I'm gonna be turning up at 90.
Me too, but I mean, I would rather have my money a little bit earlier.
Yeah,
than that,
Right. No, yeah, I don't want to
So-
wait to 90.
And even if you look at 4%, like they give us for our 401ks, TSPs, 459s, all of our tax deferred plans.
Right.
It's going to the same thing. The rule of 72 still applies. So your money is only going to double every 18 years.
Right.
And so then it's at 65, you're going to have $40,000. But now what do people want to do at age 65?
We gonna retire.
Well,
I'm
you
gonna
wanna
retire, but
Well,
I
they
wanna.
want to travel, right?
That's right. That's
Yeah.
right.
How long can $40,000 last you?
Yeah.
But then look at stocks, bonds, real estate, Bitcoin. They give you 6%.
Mhm.
Yep.
So now, when you turn 65, you have 80,000 because it doubles every 12 years. But that's still not enough to stay retired 30 to 40 years post-retirement. And so if you're looking to retire at age 65, you definitely want to look at your retirement plan. And once they take the taxes out, which is going to be 40% if you're not penalized from taking the money out before 59
Give
and
me
a half.
so give me an
Inflation.
And
so-
inflation.
okay, so-
and taxes.
So now she's kind of segued into this work, this corporate policies that we have, what they call the group, it's like a group policy. So for instance, I work where I work. I work in a corporate facility. I've been there for 21 years this year, and my pay is so there. I think it's like 4 or 5 times my pay. So I take 5 times my pay is what my insurance is. And so I've asked the questions. Like I remember when my kids were under my insurance, after they turned 26, they cut them off. And when my son, I was like, okay, cool. But then when my daughter got 26, I was like, well, wait, she got an insurance policy. And they were telling me like, it's already, it's September. Her birthday was in July. And I'm like, okay, well, why didn't anybody tell me that I could have asked to take on that policy? Instead of them I've been paying for it for 13, 20 years, And so why didn't they tell me? And so what I'm told now, because I've asked, it's not that information is not publicly out there. I had to ask our HR department, like, if I was to retire, if I was to leave the company, what happens to that insurance policy that's worth over almost $1 million? What happens to it? And they said, well, you let us know and you can keep it. And I think a lot of us don't understand that when you leave a job, whether you were fired, whether you left, or whether you sick or whatever happens, you can take those policies. If you
Sometimes
ask,
you can,
if
sometimes you cannot.
it's available.
If it's group insurance,
Yeah.
the whole group that's in that plan has to agree to take it.
Right.
And when do you get everybody to agree on
And
everything
most
at
of
the
the
same
time, when you're in the corporate session, it's definitely a group plan. It's not
Yeah.
individual plans.
And it's cheaper because it is group.
Because we're
Right.
correct.
Okay.
And
So,
then you also want to look because you didn't mention accidental death insurance.
oh yeah.
So see, again, most of our jobs are offering us accidental
Right.
death insurance. But guess what? You have to be on the job performing work task duties for that to pay out. And what if it was an accident? What if you
Right.
just had a natural cause and you don't get paid out for that?
And if your job, always say
Have
ownership,
something outside.
have your own.
Have something
Well,
outside.
you control it. Those group plans do not have living benefits. Number one,
They don't have what?
living benefits.
Okay.
They can't afford to. So I understand that. But
When you say group plan, is it like your family group or the?
no,
No,
your
the job
job.
group.
Yeah.
So say for instance, they have like 20 to 15. My company has over 20,000 employees.
Right.
And so because they have they have it available for their employees, they get it like a lower rate.
And I showed you the proxy statement for
Right.
PG&E where they're
Don't
utilizing.
we, don't we
Okay.
talk
We're
about
not
my
talking about
people.
the
Did you,
job.
don't we?
We're not talking about it, but
Okay.
it's still a wonderful thing. However, they have this 401k so they can share with the employees. Yeah, we see it, we have it, we have the same thing. We know it's going to be taxed.
Right.
But where do they put the majority of their money? They put the majority of their money in life insurance.
So
And you can look online, so it's not me bashing them. It's a proxy statement,
it's
and
not-
it's a
it's not.
public record.
it's not a bash.
Yeah.
And so looking at corporate strategies, so on and so forth. So in researching for this session, I noticed, I saw where Sears canceled 90,000 insurance policies. Why, I mean, people are retired. They were depending on that money. How would the government, how would the state, how would the how would they just let them just cancel their policies on their people? And what happens?
Because they go bankrupt.
And you have to understand, you guys, this is a business. They did not go into business to give your family benefits. They go into business for them to make money.
And I'll tell you,
go
I'm
ahead.
sorry, excuse me. And I'll tell you, let her go ahead.
So I'm just saying that, that's why I think you guys, ownership. You have to have your own policy, nothing on the government, your job, or anybody else. You own your own policy that you call the shots and do what you want to do with it. My policy, nobody can cut my policy but Juavette.
Okay.
I don't depend on a job or anybody else. Depend on yourself. Have your own outside of your job.
So that's what they
Please.
consider as being the private group versus a private. Okay. And so at what point should a person talk to a financial advisor? And so say for instance, I'm 22, I just got a job at Google or Facebook or one of them of those places, and they're only telling me to, 401k. Do my 401k. What would you suggest that they go talk to a financial planner? And I know we have insurance agents, and some of you guys do more than just insurance. So is there a one-stop shop for having somebody come in and talk to a financial planner and getting insurance? And how do you know who to trust? I mean, how would you know who to trust?
Who do you want to answer that question first?
I mean,
You want Mike?
let's get different perspectives.
Okay.
Me personally, I don't worry about financial advisors. I feel like a lot of times they want their fee too.
Exactly.
Like you said earlier,
Exactly.
with Google, with books, information's out there for you to be your own financial advisor if you really want to do it. If it's really important to you. I would say talk to an insurance agent. I would say read some books about financial literacy. I don't think a financial advisor is necessary, me personally. Not when you like the scenario you gave, 22 working at Google. Like you got some time before you need to worry about allocating the funds like that.
So
Yeah.
what is your take?
Most financial advisors, unless you got a lot of money, they don't talk to you anyway.
Right.
Because like you said, they get paid based on commission of what you have. Financial literacy is something that we need in our community, period. And I appreciate everybody being here because you guys, it takes us
Yes.
to be that resource.
Yes.
I'm part of a group called NARAB, which is the African American Real Estate Group. And I remember I was at a conference in 2017. And in this conference, you guys, they had a mission. Their mission is to help 2 million African Americans get into homes in the next 5 years. And I said, wow, that sure is a big mission. I don't know how they're going to do that. Right? But you guys, they had this whole plan. I said, oh, maybe they can do it. But in that conference, they said to us, you guys, getting people into homes is important, but go teach our people how to use life insurance to build wealth because they don't know. And I said, that's very interesting. So I came back and I did some research. And I researched how many African Americans have insurance compared to white America. What do you guys think I found?
Less than 2-3%.
This is what I found, you guys. We own more policies than white America.
But
But we own 10,000,
Right.
20,000.
Yeah.
They own 1 million,
Right.
2 million.
Yes.
That's when I said, oh my God, well, that's your mission. And about 3 years ago, we started something called Project 1000 Mission. And it was to go into our community to educate people. I don't care if you're 15, 25, 50, 60. It has to be a conversation
right.
in the household. So whether it's a 20-year-old or a 50-year-ld, somebody has to start the conversation. But I think, guys, that's on us as a community to, ask questions, say, who do you know? I met Samantha through somebody else. So, just being able to say, guys, the information is out there and we do want to help you. Everybody here, it doesn't matter who we are.
Yes.
We all have the same mission to help our community to have the proper protection that they need for the whole family. The whole family.
Okay, so I'm gonna read out a couple of these comments. So Jaleisha King said, "What is a good insurance agency?" So what we're gonna do with the panelists here, we're gonna have them drop their information in there, and I guess whoever you feel comfortable with. I'm not gonna point out anybody because I can take a page out of each book, and I might buy a policy from each one of them because you can never have too many policies.
That's right. Come on
in
now.
my book, you can never
Come
have.
on now.
I want to be able to. If something happened to me, cash them all out. Cash them all out because I want to. You can start You can start make a book with my name on it. You can,
Right.
you know, just do something, make a t-shirt business with my name on it.
Right.
I mean, my niece does shirts, so I'll make sure I leave her some money. I know a couple people had questions. Brother Ron said, what is the determining factor for how much should one secure in a policy? And I think you had broke something down as far as income.
Yes, so when you sit down, can I go back really
Go
quick?
ahead.
Just because like what Mike was talking about in regards to a financial advisor, how they charge, you know, a fee. They, you know, $1,500 to sit down, and all they're going to do is offer you a term policy, and they're going to want you to invest in mutual funds and variable accounts because they can manage those accounts
And
and get paid to do it. Now with us, we don't charge our clients anything. We sit down with our clients and we educate them. We educate them and help them. We
Yes.
share with them about the 3 rules of money, because how can you win at the money game if you don't know the rules?
And what are the 3 rules?
Well, the 3 rules, if you want to know, we'll sit down with you. Just call me and I'm happy to sit down with you.
I tried, y'all. I tried.
Calendar, and we can sit down and talk, you know. And so Mike is gonna come over with us, and
Are
I'm gonna
you
tell
still in here?
Oh yeah, he's coming. He already told me. So, and I'm glad. And you know what?
She's
coming over
look,
too.
listen, y'all. I'm just gonna tell you this. She got a beast mentality. No, I'm just telling you. I'm telling you. I just be walking and minding my own business. I can promise you. Oh, you know what? I'm just minding my own business. This lady like Sam. I'm like, who is this lady? But she's, you know what? It's just her passion.
Yes.
I love
And,
it.
and I
love to
think,
help.
you know, that passion is contagious.
Yes.
The energy you come up because you know what you're talking about.
Well, you know what happened for me is when I sat down with a financial professional, because that's what we are. We're licensed. That's what makes the difference.
So y'all got a license?
Of course.
So y'all had to go
Of
through
course.
school and all that. Y'all can't just go
I'm
and
going to show you because I know that you can do it real quick because you're super smart and you gravitate in the information.
She
and you
trying to
just-
give me too, y'all. Y'all see that?
Okay. And so I'll show you how to do it because you can still do what you're doing and get referrals, splits.
And then
I'll share all of that.
I get some money
all
too.
of that.
So I can set up my
Yes.
generation.
All of that, and still do Sam, the workout lady. And guess what? We're gonna cover all of that, so to
All of
make
that.
sure you straight.
Okay.
However, I wanted to mention too that, you know, when we're talking about 401k plans, we have to understand that the 401k plans was never meant for the employee.
That's right.
It was meant for the employer. Because for every dollar you save in your 401k, the company gets $2 and then they get the tax write-off. So when you're looking at how at the end of whatever your total account value is, that you have to give back 40%. It's called the 40-40-40 scam.
So say for instance, we have 300K in our 401K. Pull out. I know you got a calculator.
You know I do. Don't play, you know. Okay, come on. We got how much?
So say for instance, we have 400K in our 401K.
400K. Okay.
Okay. And so just say a person's going to retire at age 60. Is it 69? Damn, they make you wait that long?
60, 65.
65.
67 is the new retirement
Okay.
age.
So they want to retire. And then you said,
They're going to take 40. They're going to take 16,000 from that 400,000.
okay, so
And then every year after that, you're going to have to take 4%. Otherwise, of that 400,000,
So-
you
so-
take away the 16.
so we got 400,000 minus 16K.
Yep.
That leave me with what?
That
384?
Good.
So we got 384K after the 400,000.
Mhm,
And that's after they take their $16,000 taxes out of it.
mhm. And then
Okay.
each year after that, you have to take 4% of whatever is left in your account value, or the government is going to take 50% of your 4% because they consider it as income. And I'll give you an example.
Okay, but okay. So I thought in my at my job, they always say that it's pre-tax, or I don't have to worry about the taxes because
Oh,
I'm
yeah.
dumping it into my 401K. So you trying to tell me
telling
Okay,
you.
later on.
I'm gonna be double taxed?
Yeah, of course. You know why they tell you that?
So why did I just get taxed for the little
Because
hundreds and
that's
dollars?
called tax now. If you make that appointment with me to do the 3 rules of
Ah!
money, I will show you how that works.
Okay.
And you know
However,
what? They do the same thing with life insurance, though.
Of course.
At your company, and I'm not gonna say which company does this. You go in as that employee, right? And they give you life insurance. When you leave, remember, you guys, they own that policy. They bought that policy. So now
I'm talking to her, PG&E.
And I'm not talking
Don't be
about
talking about.
No, did she say that? You said her company or my
no,
company?
a company.
Oh,
I'm
you
not
said
gonna say
a
a company.
Oh, okay. I thought you said me
It was
because I
not
was going to say
PG&E, though,
that's
no.
not true.
Okay, so
Well,
no.
keep saying my company.
Oh, you said it first.
I'm talking about a corporate company.
Okay.
So they buy insurance, for their employees. That employee leaves. They keep your policy.
Yeah.
When you pass away, they cash out.
Yeah.
What the heck?
Because they have
Because
the
they bought it.
insurance
They
on
bought
the
it as an
employees.
asset.
Mhm.
They're a business.
It's meant to benefit them.
That-
And so
that's what I was saying,
and then they
yeah.
write it off every year too,
Correct.
on their taxes.
And I was like, how can they do that?
Yeah.
But guess what? They're a business. Of course they can do that.
Of course. And guess
They're a
what?
business.
If you're not, that's why it's so important to have you a plan, as you
Yes,
mentioned,
that's right.
outside of your 401k, because you want to make sure that you're creating generational wealth. What if, when I'm talking to people all the time, they say, hey, I have insurance on my job, I have a 401k. Okay, what if you lose that job today?
Right.
COVID, people are losing their job.
Their
Our
lives,
business
yeah.
is up 80%. Why? Because people are working from home, or people are, losing their jobs. So they're saying, hey, let me see that opportunity you was trying to share with me before. I'm ready now.
And I'm going to say something because you said something that was very, very important.
Okay.
And you said, about having your own bank.
Yeah.
And I have, and I'm sure you can help me on this. I have two boys, 26 and 29 years old, Kevin and Brian. Okay. Kevin is in Japan, so Kevin's fine. He's not here. Brian, my 26-year-old, on Christmas, Brian went out to take pictures. Okay. Just, that's the creative part, right? He's taking pictures, and I'm just going to be, you guys, I'm just going to be honest, okay? This white guy goes by Brian, comes back, and says to Brian, will you take my picture? Brian said, I didn't take your picture. The guy said, yes, you did. I saw you. Brian says, I did not take your picture. Maybe when you were going by, you got in my picture, right? So Brian takes the camera and says, okay, there you are. I'm pressing delete. This man cuts my son out up and down.
What?
Now, if you know my son, my kids are very quiet. Brian, 26, and probably looks like he's 16, because we're all small like that. And then the guy takes his skateboard, hits Brian over the back, and takes off. And I said, oh my God, did you call the police? And Brian says, what do you mean he's gone? I said, no. I said, just kind of like, report it to make sure, to be a camera or something. And he says to me, why would I call the police? They don't care about people like me.
Yeah.
And I said, Brian, that's not true. And Brian says, it is true. Don't you watch the news?
Right.
Brian says, there were 7 other people behind me. Nobody helped me or did anything. And as a parent, that broke my heart.
Yes.
But what it said to me as a mother, and because when you said that, you guys, we have to build our own wealth in our families, period.
Because nobody else.
I don't care
about
because life is not fair. I have an African-American son.
Yes.
Life is not fair to him.
Yes.
What if, you guys, Brian can have the best credit ever, go try to buy a house and still get denied. Let's be real.
Yes.
So that's why, when you said that, I was like, thank you.
Yeah, I'm on with you. I have
you guys,
17.
That's what we have to do. We have to build, you guys, our own trust in our families. I don't care how you guys, business, real estate, insurance, you have to build that, in my opinion, in our community, in our families.
So I want to go back because I don't think we ever answered Brother Ron's question.
Sorry.
He said, what is the determining factor for how much one should secure in a policy? Rosalind said, no difference between an advisor and a consultant or agent. Speak to all, and you all will see the difference. Someone said, case by case, a lot of the factors go into what you want into a licensed agent that can help you factor in everything. Depends on your situation. Rachel has access to multiple companies to find the right one for you. So that's like the brokerage piece.
Well, yeah, we're non-captive. And I know you wanted to ask that question too. But can we answer the question?
Brother Ron's question? Yes.
And can you say what that is again about?
So I'm gonna answer. He said, what's the determining factor for how much one should secure in a policy?
Correct. So what we do is we sit down with our clients, we educate our clients for free, and we share with them, we do a personal financial review. So we never want someone's blessing to be their curse. We don't want someone anguishing over a premium amount on a monthly basis. So we sit down with them and we look at what their debt is. We help them get out of debt. We help them to manage their credit. And then we also help them to see what their expenses are. We take it away from their income. And then whatever their discretionary is, Then we determine about each person in the family, what the needs are, and then we run illustrations according to what they can afford.
So we use income, take away the debt, and then go away and then factor in their needs.
Factor in their needs, and then
Okay.
we use their discretionary, the money that's left over. And then what we do is share with them that, now that I'm your agent, I'll sit down with you annually. We'll do a review about what your needs are. There may be new children in place. You may want to get long-term care. Many people don't realize that 80% of Americans are going to need long-term care at some point. Our jobs never offer us that.
Right.
So what we do is we also share with families that when we sit down with them annually, now we can increase their plan, as they see the need, or we can add on to their plan. So start somewhere, as Mike said in the beginning. Start somewhere and get coverage, whether it's a term, whether it's a life insurance retirement plan, an IUL, whether it's a whole life, whether it's a final expense, whether it's living benefits, long-term care. I offer all of them. Fixed indexed annuities to make sure you can stay retired so your money is not volatile to the stock market. You will not lose your money. Your money will be protected. You'll have guarantees. It'll grow at a high interest rate, and then plus it has a death benefit. Can't beat that anywhere.
And she going like this. Y'all know she know what she talking about.
And there's also a formula that you can use. It's called the DIME method.
Yep.
DIME.
So y'all both use this. Okay, so that's the debt, income, mortgage.
Yeah,
There you go.
so you add up your
Look at
debt.
you, ready.
You take your income, your annual income, multiply by like 10 years. What is your mortgage? What do you want on your mortgage for your house? And use your education, like maybe you have kids going to college. You add all that up, that's how much coverage you need.
Okay.
And then as she said, we sit down with people, we do the personal checkup to see what can you afford. Like a lot of times, you guys, I'll mix term and a permanent policy.
Yes.
Because, like I said, I have both. So, but once again, it comes from doing that checkup, right, to see what is their income
What's your
left.
needs?
Right, exactly.
And see, I don't recall when I got my first life insurance policy that anyone ever did that. It was like, what's your name? What's your birthday? Sign this paper, and where we gonna pick up our payment from?
No,
That was the extent of it.
education and helping. That's
Yeah.
all we do. Educate and help, because we want you to know the value of what you have. Because
Yeah.
if you don't understand the value of what you have, you're not going to keep
That's
it.
right.
And then what happens? As soon as you let go of your policy, because the first thing that people do is that they get an expense or a bill, the first thing they let go is their plan.
Right.
But yeah, and I think that's what we get away from the millionaire mindset.
Yeah, it is.
And that's what I want to start using the hashtag
Yeah.
millionaire mindset.
There you go.
How are we gonna become millionaires?
And
Yeah.
you know how? There's a book.
Look,
There's a book called Money, Wealth, and Life Insurance. It's by a man
Mhm.
named Jake Thompson. You can get it on Amazon for about $5. But it shares with you how the rich and the wealthy have used life insurance
Right.
for over 113 years. It also has examples how the banks own life insurance. Why does the banks own life insurance and not property and casualty? They own that too, but why would a bank need life insurance?
Well, go ahead and answer that question, man.
Well, I'm asking questions. Do anyone know here? No? The banks need life insurance because it's the top tier one capital assets for the wealthy Americans to grow income at a high rate. So if you're looking for protection on your money, you want that, right? You want guarantees on your money, right?
But the bank only cover you FDI. I think
The banks the banks own life insurance.
Okay.
FDIC, Federal Depository Incorporated.
But that only
Insurance.
isn't there a cap on that though? You only
Yeah.
cover for a certain dollar
250.
amount.
The banks
250.
own millions and billions of dollars in insurance.
Okay.
Okay, so no, there's a cap on how much you can put in your 401k.
No,
You can only put about
Yeah, but there's
7,000
also
a year.
a cap with the banks as well.
Yeah. Well,
250.
no, the banks own millions of dollars.
No,
Yours-
I think
No,
he was
that's talking
asking
about the
what you put in
FDIC.
Oh,
I'm saying like
okay.
it's only insured
Right.
for so much.
for
You
250.
talking about the bank?
Yeah, the bank. I mean, if you had money in the bank, it's only insured for
Oh, yeah, you're talking
250,000.
about your bank, but I'm talking about the banks
You mean-
own life insurance.
Okay.
Because it's the top
Tier one asset.
asset for wealthy Americans today.
Okay.
A bank is not
And
a
I like what
life.
you were saying, like, because in that book they talked about how J.C. Penney's use insurance,
Yes,
how
yes.
Walt Disney use insurance to get their
Yes.
business back on track.
Any company that you see today that's wealthy, that's still available today, they
Right,
put all
exactly.
their assets in insurance. That's why you see a McDonald's on every corner, right? Walt Disney, like you said, Disneyland was created off of
Built
insurance.
Disney off insurance.
Right.
Yeah.
Look, I had an Airbnb. Can I just say this real
Go
quick?
ahead.
And I met with a couple and I was trying to talk to them about insurance. She told me, and she was Caucasian. She said, "Oh, my husband and myself have been living off my husband's insurance policy for the last 11 years." She said, "We have a bed and breakfast right on the top of the hill. You see up there?" And she showed me, and they've been doing it. And so we're the ones that are now just getting to learn this information by having agents come out and share with families.
And so someone asked, can an 18-year-old, can they can, but 18 will be under the control of an executive. So can someone under 18 get a policy? I mean, well, they have a policy, but can they control a policy?
So listen, as soon as someone turns 18, now they're the owner of the plan.
Right.
Okay.
But the parent, the grandparent, the spouse, they can also have, they can be the beneficiary, they can be the payer. But the person, when they turn 18, has to own the policy.
Okay.
And I will say,
let's just go back really quick so you guys can write this down. Brother Ron's question was, how do you determine how much life insurance you need? So she said dime. We're talking about DIME, like the 10 cent.
Right.
So the dime. And so the D was debt.
yes,
The I was income times 10.
annual income.
Annual income times 10. Your mortgage and your education, which could be the college, whatever, so on and so forth.
And they kind of estimate about 100,000 per child, even though we know it costs way more than that nowadays, but that's just a good estimate.
So just to make sure you guys had that, it said, please list the name of the book for Amazon. What was the name of the book?
So it's Money, Wealth, and Life Insurance by Jake Thompson. And then What Would the Rockefellers Do? There's over 14 books written on what we do with Index Universal Life, with life insurance. So there's a book called The Retirement Miracle.
Oh, yeah.
There's another book called Tax-Free Retirement. There's a book called The Volatility Shield. That book is amazing. You know what it does? It takes one man's journey as everyone that has a 401k. So it walks you through the whole process when you get ready to retire and how you realize he don't have enough money to retire, the mental anguish that comes in. He goes down and sits with a financial advisor, and she tells them that there is a sixth way to retire. But she doesn't tell him what it is. Why? Because she can't offer it to him because she's not licensed. So now he's running around trying to find the sixth way, and all he had to do is come talk to me.
Told you something wrong with her. She's smart. Something wrong with her.
No, I just love what I do. I'm passionate.
And I also want to say, when it comes to generational wealth, I think that we need to start having family conversations.
Yeah, I think people are shy because I'm telling you, I can show you a text where I've been texting my siblings saying, it's almost like I'm begging them to put me under insurance. Not that nothing's wrong with me. I'm healthy. Nothing's wrong, but I've been begging them, like, add me to your policy.
But I mean, even just to have the conversations, like I said, my kids are 26 and 29 years old. Okay, I asked Brian the other day. I said, Brian, are you getting ready to buy some property? You know what he tells me? I'm not buying property. Now, mind you, mom is a real estate broker. I said, what are you talking about? But you guys, most millennials don't even want to buy property. And I was like, I don't understand, because you guys, it's a different world for them. My son is 29 years old. Okay.
How old are you?
31.
So he's a millennial as well. Do you believe that concept? I know you have a family. So, I mean, what is your take? I don't mean to cut you off, but this is a millennial right here. He's about your son's take. So what is your thought process? Do you think she's accurately reflecting that on all of you guys, or just?
I think it's more of a percentage than it was with y'all generation. Definitely not really tripping off buying houses.
I'm only 35. What you mean?
My bad. my bad.
Very ambitious, though, Sam.
I'm gonna be quiet.
You are.
So yeah, it's a little truth to it. I don't fit that mold.
But there's a reason for it, though. We have this whole thing in our neighborhood group because house before the car. Okay, mind you, when I was 29, you guys, I was married, had kids, I owned a home, had a good job. Kevin at 29, what does he have? A student loan debt.
Right.
So I'm just saying that for them, it's
different.
It's different. It's like, oh, I don't want that commitment, but that commitment brings legacy. And so just like real estate, insurance, just a whole, financial concept, conversation needs to happen, I think, in more homes with grandma, with mom, with the kids, because every generation has wisdom.
But we all have to know it. You can't. I didn't. My grandmother. I'm barely knowing it, and my grandmother's from the South, so her education didn't go past high school, or junior high in some cases. So I wouldn't expect her to be able to have that type of conversation
Not
with the
about,
insurance
not
rep.
about life insurance, but
I mean,
about money.
I think about
Yeah.
the generational wealth. Like they told us to get a job,
Mhm.
just get a job, not to be the owner of your job, not to increase our insurance so that at one point, you know, if my grandparents died, they were 80 something years old. I could have been a millionaire.
Mhm.
If
Of course.
somebody would have taught me, and that's what I'm looking at when I start to look at these millionaires or people that's running these Fortune 5,000, 500 companies. They all, but they don't even want the stocks anymore. They want insurance. So speaking of one
And
of
you know
these,
why, right?
we'll say for instance, let's use OJ Simpson.
Oh,
yeah.
yeah.
please.
We're gonna use OJ Simpson as an
Yeah,
example because
that's true.
he was convicted. Well, he wasn't convicted, but the family tried to sue him, right?
Right.
And they couldn't.
Right.
There's money waiting, but they can't touch his retirement. They can't touch his money.
Life insurance money.
It was a life insurance policy that he had, and so he had all his wealth. So he had a financial somebody that had his back, was like, man, you better get this insurance so that if something go wrong with your career or you can't make no money, this is your bank, right? He created him a bank,
Right.
and can't nobody touch it. And I know you want to tell your story. She kicking me under the table, y'all. Come on, tell us a story
No,
come on.
because you mentioned O.J. Simpson, and that's the whole thing. Anything covered under the umbrella of life insurance cannot be taxed. It cannot be touched. And only the person that owns the plan can have access to the account. So that's why when OJ went to jail, he came out richer than he was when he went in. Why? Because the compounding interest effect. Okay, and so no, Ron Goldman's family couldn't get it, Nicole's family couldn't get it because it was covered under the umbrella of insurance. So let me ask you a question. Would you want your retirement to be taxed, or would you want your retirement to be tax-free?
I want tax-free.
Okay, now, do you want to retire by design or do you want to retire by default?
I want to design my retirement.
Okay, let's sit down and talk.
Here she go with this. Here she go. I don't know, Michael. I don't know. We have some questions on here. It says money, life insurance. What would the Rockefellers do? The power of zero. Okay, I think Bria is putting down. Come on, Bria. Thank you for having our back.
The power of zero is amazing because it actually shows you that, see, what we don't realize, and this is what happens. The market has to reset itself every 7 to 8 years, every 8 to 10 years at the most. The market has not crashed in 13 years. So what do you think the market is getting ready to do?
It's about to crash because when was the last time?
It was down, well, in 2008 on the housing market.
2008.
And then right before that, 2001. And see, people don't realize a lot of our homeless today comes from the 2008 market crash. It's not that everybody are derelicts or on drugs, that they don't want to work. Many people haven't recovered from that because what did they do? They lost their homes, they lost their pensions, and many of them lost their marriages and their families. And so that's where a lot of our homeless comes from today. And yeah. So
okay, I do have another comment. So as I said, as I was getting ready for this session, I started to read about a football coach, Jim Harbaugh.
Oh yeah.
And so his negotiating factor with where he was going to end up. So I think he was a professional, and then he ended up being a college coach.
Yeah.
And as people were courting him to try to get him to come work for them, one of the things he was, he didn't care like the stock market or he didn't want the stocks. He wanted to make sure who had the best insurance policy. Because what I'm learning from, like you said, looking at the proxy statement of these big companies is that where are their money going? Because like you said, all the money is, you can see it. You can see where these corporate people, and they're rich, where their money is going. And most of their money is actually going into the insurance industry.
Yeah.
They don't want the 401k because they're afraid that, with the stocks crashing, like you said, the market's about to do its thing.
It was down 600 points 2 weeks ago. So every time, the market gives you warning signs too when it's getting ready to crash. So my suggestion to everyone is move your money now if you can. If you've been on your job for over 20 years, many times jobs won't let you roll your money over into a fixed indexed annuity and a lot of them are putting clauses on it now because they used to have what was called an in-service distribution, where you could move a portion of your money out into a fixed index annuity. But now the companies have gotten real savvy with that, and they're not allowing you to move your money. Why? Because again, the companies get tax write-offs for every dollar you put in. They own that plan. And so, of course, they don't want you to get wealthy. Of course, they know, hey, defer your taxes. They tell you defer your taxes. but they still regulate how much you can save.
Right.
They say you can't save over $7,000 a year, but don't worry about the taxes now. Pay the tax later. Let me ask you a question. Would you rather pay your taxes on your seed, your small contributions, your 200s, your 500s a month, or do you want to pay taxes on your harvest when it's the most of your money? Those, did you know the average person that's 50 years old only has $38,000 in a retirement plan anyway? The average person. So if you
And
know,
that's why whenever they retire, they go work again.
and did you know that Walmart is the #1 employer for people over 65?
Yeah, they all.
Well, 'cause they make
door
sure-
greeters.
They're what?
They all door greeters.
Yeah,
They all
yeah,
do it.
yeah,
And
yeah.
it's super sad because many people don't plan to fail. They just fail to plan.
Right.
Right.
And
So,
That's real.
yeah, go ahead, Mr.
so I want a $1 million policy, right? Say for instance, I want $1 million policy. And so say for instance, just say if my mother had $1 million policy and I was the beneficiary of it. Now, is that taxable? So I think a lot of people, they'd be like, okay, so I get this insurance money. So say for instance, I'm on Social Security and somebody who I had covered passed away. And so now I get all this influx of money. I really don't want to, mess up my SSI. I don't want to mess up my Social Security. Can you tell me if that money is taxable?
Not in the plans that we offer.
They're not. Well, insurance is not taxable.
It's not, it's tax-free, and that's what I just
Life
shared.
insurance is not. It's not
And then
taxable.
also, we have a policy and a plan that we help families with a living trust and a will.
Yeah.
Many people think just because they're next in line, so to speak, like the spouse or the children, that it's going to naturally go to them. But see, this is what happened with Michael Jackson, Aretha Franklin, and Prince. They didn't have these things in place, but guess who did? Kobe Bryant. He had over $30 million. So his wife, his family will never, ever. Guess what? He had it in an index universal life. What we offer.
Say that. What is it called again?
It's an
IUL.
index. It's an
Index universal
IUL.
life.
Index universal life.
Yeah.
And y'all heard it first. It's not it's not taxable.
Life insurance is not taxable.
So it's not taxable. So everything we have in this life is being taxed.
Yeah.
And
And
that's,
that's why rich people are rich, because
Exactly.
they are investing in these life insurance policies.
yes.
And if you're gonna cash out because somebody gonna, I hate to say it, but
And it's not even if you die. I mean, people can use it when you're still living. Like you
So
said,
like
you know,
the
after
retirement
that,
plan, it becomes a
benefits,
retirement plan.
Retirement, right? When you're
So,
living.
the bank part comes from because you can start pulling from your plan instead of trying to get a loan from your credit card or your
Right.
bank and creating more debt. And so as you're saving into these plans with your premiums, you're paying your loan back. And then that interest is going into your cash value. And so now when you're going ready to retire, now you have a pension for life that's tax-free. And then it's still a death benefit to your heirs.
Right.
But again, I just want to go back with the will and the living trust. You have to put these things in place because what happens is even if you're saying, hey, I'm the wife, I'm the husband, I'm the children. Okay, but now it has to go to probate. You have to prove to me that you are next in line. But by that time, there's so much fees that's eating up, the lawyer fees, the costs, that by the time the family, prove that I'm next in line, they've lost millions and thousands, so.
and how long did it take to
And
get
that's
a
why you
will
want a
established?
Really 15, 20 minutes.
And a will is not enough. You gotta have a trust.
Okay, so we have both.
Yeah.
We have a will and a
living
trust
trust.
and a living
Good for you.
trust, just to
Good for
kind of make sure, the kids,
Let's go
they
through
they
both
not
trust-
gonna fight
trust
over our stuff.
Yeah.
Everybody
Exactly.
knows what percentage they get, and it's all
And that's
stipulated.
for everybody. Put your stuff in writing.
And we had to update it. We just
Everybody.
recently had to update it because I believe my sister and my mother-in-law were the ones that were my executors, because we got them when the kids were really young. And so now that, my kids are older now, we had to switch up some stuff and take some
Right.
people off and refile and file some documents. So the living will has something to do with the healthcare proxy as well too, right?
Yeah, we can do that with a company called Legacy Shield. They'll create the whole living trust for you, the will, and then we also have a company that, some people can't afford a living trust and a will, but we have a final expense company that we work with, and they start from $5,000 to $50,000. Their final expense, but it's still a whole life plan, so it never turns out, and it has some cash value. And then the concierge steps in and does all of the arrangements for the family. This can be a huge benefit, especially right now with COVID. I had a client, her mom just recently passed away 2 months ago. She had a plan with Everest. You can play the video online. It's only 2 minutes. It just shares with you how the concierge steps in, was able to find a funeral home for her mom. at a reasonable price, because now I just had a family member pass away. And now, because there was not an Everest plan in place, now they're saying that the family can't move forward with the funeral until 2 weeks from, until mid-March.
Wow.
So again, it's very important that you have these things in place until it's about building. It's not about, Rome wasn't built overnight, but start somewhere and then educate yourself and then move forward. And then once you come into business with me, I'll train you, I'll coach you, I'll teach you, because we have mentors, we have coaches. Our platform is like none other. Our compensation is world class. And the thing about it is you learn all of these things, and then the coaches help you to achieve them all too. So it's a blessing.
So I'm gonna read some of the comments we have. Ms. Rosalind said we need to start early, kids. Amber said home ownership is so important. Yes, it is. I don't think they understand the importance of purchasing a home, is what one of them said. My Aunt August said, still not too late, and my daddy was 90. Excuse me. Okay, Auntie. Abby says tax-free. Yes, Abby, tax-free. Bria said, can you discuss the importance of a will and a trust and connection to insurance, which we did. Someone said, this is how the wealthy stay wealthy. Exactly. That's why it's time for us to change the narrative, so that we already got the fight the power. We all that. Now it's time for us to be smart here. And then smart with our money.
Economically. Talk a little bit about that.
You're going to talk anyway. Go ahead, Mama.
No, I just want to say, when you talked about the millennials, why they're not considering buying property and homes, is because they feel like they'll never have enough money to achieve it. Because especially if you're talking about California, property is super expensive here. So they feel like, what's the use? I would never have enough money to do so. But see, with us re-educating our youth, I'm so happy you're here, Mike. I mean, I just really love the fact that you invested in yourself and became licensed, because see, you can change this whole generation that's coming, because they need to see someone like you that looks like them,
right?
Where they feel like, oh, he's doing it, I can do it too.
The power.
Yeah, it's
power. It's power. So Laverton says, sign me up. Okay, girl. She gonna be one of them gonna be contacting you. Absolutely. But it is, it's no competition at this table.
No.
From what I can tell is that everybody is like a sponge. So they both have a same understanding of what's going on, and what you don't know, you kind of pick it up and be like, oh yeah, I did hear about that. But these books that she's pointing out, it's important that we educate ourselves. We ain't gonna just depend on one person to educate us. It's resources out here for us to do our best. But I wanted to kind of piggyback on the annual, the lock index I had put here, and it's a joint survivor benefits, and then the age, gender, and cost. So that's what it seems like sometimes, like, when you get car insurance, it's all about where you live. What's the crime look like? I don't know. Why do they rate us? Is it just us, or do they rate everybody? Or you have to have a good zip code, or
they rate everybody, but when it comes to PNC, you got to remember, it's a business for them. Right. And so if certain areas have more crime, then they're gonna rate you higher. Because guys, they're not that's what he said, ownership on your own. Their business is to make them money, not you. Having your own policy, you allow yourself to, like you said, design your own life. You're in charge of your own life. And I just want to give a quick shout out, before we run out of time. We have a special series coming up, and it's called Be the Movement, Black Economic Empowerment, Be the Movement. It's a 4-part series. And on the 16th, the Tuesday, and the Thursday is about real estate. But the following week, on the 23rd, Chris Horton is coming on. Chris Horton is the regional director of SBDC, Small Business Development Center. You guys, they have set aside this year $150 million for Black entrepreneurs. 150, I don't care if you're a brand new entrepreneur, seasoned business owner, you guys, they have money set aside. You guys, please tune in on the 23rd. He's gonna go over, you guys, all the requirements. He says, Juavette, tell all your people, they need to get this money. They need to get this money. If you are a business owner, we have to have special plans for business owners, because for them it's a little bit different, right? So they'd be able to write off their policies.
Yes.
But you guys, on the 23rd, please tune in. If you go to www.jointhemovement.com and register.
Is that LaStar Moore? Is she with you?
Yes.
Okay, so
Chris
she's
Horton, you guys, is this man, you guys, he is all about black empowerment, all about you guys.
okay.
Yeah, there's somebody.
joinbethemovement.com.
About the
So
rolling over?
join
Okay.
bethemovement.com.
Okay. Okay, so I got a couple questions. We have like 5 more minutes. This is series is popping. People want to know. It seems like you about to take him with you, huh?
Oh yeah, he coming. He already said.
I'm just saying.
You know why? You know why he's coming? Can I tell you why?
Go
Really
ahead.
quick, Sam.
Go ahead.
Because where he works, and I'm not gonna say where, he's captive.
He already said where he worked.
I wasn't gonna put him on blast. And so what captive means is he can only offer what that company
Right.
sells.
Right.
But see, we're non-captive.
Oh.
We're non-captive. We have over 77 product providers, so we're not trying to fit our clients in a
Right.
box. We actually sit down and personalize for each client. We find out what they want, what their needs are, and then we offer them choices. We don't try to force them to pick something.
Yeah. And once again, you guys, I don't put down anybody's company, but but she's right. But you guys, everybody's just helping you guys. It's about education. It's about communication. And that's one thing, you guys, that our people have to get better at. We are all here for the same thing, to help our community.
And I think that's
We need to
important.
all come together, you
she's
guys,
coming
and
with me too.
Are you taking her too?
Oh yeah,
no.
So
Once again, ownership, I got ownership in my company.
Okay, so wait, so hold on. Let's answer some of these questions really quick. Peggy Moore said, can you repeat the name of the financial advisory business and books you mentioned earlier? So Peggy, if you look at some of the comments, I believe LaStar, Bria Moore put it at the top.
She's the one.
And Nicole Muhammad said, can you roll from either a self-directed 401k or a 529 plan into an IUL? Looks like Bria probably answered that. I think she said, no, you can't, but you still have some options for setting it up.
That's right.
That's correct. Laverdin said, how can we participate in the series? Is that the Be the Movement series? It's also LaStar Moore put www.joinbethemovement.com at the top.
It's totally free, you guys.
It's free. I know my cousin TT, who's listed here. She says sign her up. She wants to talk more.
Yeah.
So we're gonna put phone numbers of people on here. I'm gonna snapshot their business card, and when you guys get home, put your information out there, because the more the merrier. I want us to get these $1 million policies.
Come on now.
I want us to get these policies
now.
on deck. If you can pay for your car insurance, you can pay for your cell phone insurance, and you can go out and have a cocktail, you can buy a pair of new shoes, you can get this insurance. I'm gonna have a party. I'm telling y'all, I'm gonna have an insurance party where we're gonna have like some insurance reps in here. We're gonna probably have like 15 insurance reps.
Can I mention something about that $1 million?
Okay.
So if you have a child and that child is 2 weeks old, you can create what's called a $1 million baby plan for them. You can go on YouTube and Google $1 million baby. You can start that plan with as little as $50 and increase it to $100 after 5 years and let it ride. That baby will have over $1 million when they get ready to retire.
And that should be a gift.
Yep.
When a child is born.
Yep. And you know what?
Anybody,
I have 17.
So do you sell those too?
Of course
Anybody
I do.
in my family
So
with a
I need
baby,
to-
I buy my policy.
And let me tell you why. Because it's not because they have a social security number. It's because they have to be deemed healthy.
Yeah.
See, what people don't realize, you can't just grab one of these plans. And see, some people say, this seems too good to be true. And it is too good to be true. And so that's why you have to qualify. How do you qualify? You have to be healthy. So that's why you do it as early as you can while you're healthy. Because that's just like you cannot get insurance on a car once it's in an accident. You can't get insurance on a life once it has diabetes, once it has cancer, once it's had a stroke, a heart attack.
And before this time's out, I also want to talk about really quick about the age. I know after you, just say if I was 52 or 62 trying to get a policy, I know they make you go through the health examination, so on and so forth, and then they make you wait 2 years,
Not right now because of COVID. If you sit with me, I'll make sure that we can waive the medical.
And it also depends on the company. Some companies, like you said, like anything under 300,000, there's no paramed anyway, COVID or not COVID. It doesn't matter.
So are all insurance waiving or just your company?
Well, no, most insurance are now waiving COVID because of the proctors don't want to come in contact with families. So
if they were to get it, this is the time to get insurance.
But let me tell you what you would need to do though. You need to have a medical history though.
Yeah.
You can't never been to the doctor and think they're going to waive it. No, you would have had to, if they go and do your medication check, and they get your doctor's records, and you've been the doctor within the year, and you're healthy, then you'll be approved.
So I have a heart problem.
Well, you know what? We can talk about that heart
Okay.
problem.
You know, you guys, it doesn't matter. You guys still apply. I had a heart problem as well.
Yes.
You know, and now in the beginning, was I ready? Yes, I was. After 2 years, I got a lower back to standard because I am okay.
There you go.
So you guys don't let that be the reason of why you don't even attempt, you know, to qualify. Like she says, you know, we work with different companies. Different companies have different guidelines.
Yeah, let them
So
tell you.
Right.
Right.
So I mean, one says, like, I have one company that rated me like really, really high because of my heart condition.
Yes.
Another company gave me preferred.
Yeah.
I'm the same person,
Right.
but at the same time.
Right.
So that's why it's important to go to a non-captive company because you have more choices.
There you go.
As to which you can have. So you guys,
And we only work with A-rated companies.
Yeah, and so you
Some
guys-
people work with other companies, but they're not A-rated.
They love y'all.
And so,
You know what? This
go get
flow,
insurance. Don't let that
this
stop you.
flow has been consistent the whole night with the questions. You guys, this is not the end. Like I said, we're gonna have a insurance party. We're gonna set up this room as long as I can be here. We're gonna set up this room. We're gonna have these insurance agents here. You can ask the questions. You can ask them questions now. They're gonna go home and read. They did a fantastic job. But I want us to maximize our existence.
Yes.
You know, I don't want to just be here. I want to maximize my existence. And how do I do that? I want to get insurance, make sure that my friends have insurance, that anything that I know or any knowledge that I have, I'm going to pass it on.
Right.
And so insurance was one of the things that I was passionate about because I see it every day. I open up Facebook, somebody's dying.
Yes.
Somebody is, you know, passing away. And there's nothing, like I said, we can't run from that.
Right.
But we have to make a conscious decision to pay for insurance.
Right.
And it's just a little bit.
Right.
And it's like taking a calculated risk.
Yeah.
You know, do I want to eat? Do I want to have my coffee?
Yes.
Or do I want to create generational wealth? And when we say generational wealth, it's money that keeps growing and growing even when you're not here.
Yeah.
And so that's how other people do it. The rich people are doing it is because they're doing it with insurance.
Yeah.
They're doing it because they're knowledgeable. They're not just taking everything that they got and going outside and spending it all in one whop. The EDG checks. If y'all got 20 racks from EDD, there's no way in the world you should be broke today.
Right.
You should have created. I'm just being real.
Right.
You should have created a business. And I hope you went and got insurance, $1 million policy that you gonna. You know, I'm just saying.
And also,
we have to be smart, and not that you have to die to get it. Like you said, you can tap into it later on down the line.
I can show you how to get some money from disaster relief, and you can start your plan with that right off
the bat.
Okay,
so
and then guess what? You can start a plan as little as $37. I mean, really, if you really pinch
37.
I'm saying if you're, for children, that's the lowest, about $37.
So kids is 37 a month,
and then for the young adults, depending on your age, and depending on what you want to see. See, these plans are meant for the rich and the wealthy, so you have to understand they have to be structured correctly.
Correct.
If they're structured correctly, then they can create that wealth that you want.
And that's key what you just said.
Yes, structured correctly, because I'm gonna tell you why. People will pay like $2,000 for their mortgage, $500 for their car.
Right.
They'll even pay $100 a month for this screen if they crack it. They want to know, well, what's the least I can pay for my car, my life insurance?
Right.
Okay, so then now you want to pay $2 for life insurance, but you want to see $1 million at age 65. It's not going to happen.
It don't work like that.
It's not going to happen.
So we're going to depart, but I'm gonna let them say their final comments. I hope that everybody enjoyed it and found this podcast to be informative, because I'm like the sponge. And I just want to make sure I do things right so that my family, my grandkids are set up as best they can. It won't be because grandma didn't know no better or grandma didn't get the information. The information is here, and we have these fantastic people right here at this table that's willing to help y'all.
Yes.
And they said it's free. They'll come and talk to you for free, just to enlighten you and make sure that you're in a better position going out than you were coming in. And so their education, what they know is free. So you guys make sure you tap into them. I want to thank you, Michael, Juavette, and Miss.
Yes.
She's a boss. I gotta give her respect. I'm giving everybody here respect. So do you want to have any parting comments, Michael?
Just follow me on Facebook. Ask me any questions y'all need to. I'm here to help.
So do you have a phone number they can contact you? Do you want to just do Facebook?
You can call me or text me 510-322-1075. I'm available 24/7.
And he's 31, you guys. So there's nowhere for him to go but up. He's a millennial out here ready to have these conversations with the millennials. And he gonna speak their language.
Right. Exactly.
And give them game about it. Because they want game. They definitely want the game. And I think nobody's ever approached them.
Right.
anybody approached you about insurance? Okay,
I
so
already have.
yeah, I know you got, girl. I ain't fooling with you. Go ahead, Miss Juavette.
My name is Juavette Johansen. I'm with Bridgeway Realty Financial Services. I'm on Instagram. Thank you, LaStar. I am Because She's Fire. And we have a program you guys called Get on Fire. It's FIRE. It stands for Finance, Insurance, Real Estate, Entrepreneurship, which I believe is the 4 pillars to build generational wealth. So my number is 916-397-0601. That's 916-397-0601. My website is bridgewayfinancialservices.com. Once again, our company, also non-captive. We do all types of insurance, term, IUL, whole life. And I want to say, you guys, I have to give a special shout out to my team. While that is, I'm single, I'm home alone, my kids are gone. My team came to my house today, you see it on Facebook, and brought me a love package.
Amen.
So thank you, team. I appreciate
Okay.
you guys very much. Love you guys much. See you guys tomorrow morning.
Okay. I just want to say, Amber Swanson said, don't call her husband after 8 o'clock. Because she said she want to get some sleep. She don't want y'all calling, asking all these questions at 8 o'clock. So y'all got a little.
I go in the other room.
So, yeah.
24/7, y'all.
Okay. Well, I ain't I'm like, happy wife, happy life. That's all I gotta say. So, before I'm gonna let her do the departing words, because she gonna do the departing word. But I just want to let you guys know this podcast will be saved. So you can go back and kind of replay it to get the numbers, get the game that's was laced. You guys was laced with a lot of games. You can always go back and go to the YouTube page. It's saved there. You have the links. If you need any information and you can't contact one of them, call me. I'm gonna put out the bad light and be like, it's an emergency in the hood, y'all. We gotta make sure we get to our people, because you just never know. It's detrimental.
Yeah.
And this information is detrimental. So I'm gonna go ahead and pass the baton to you.
Okay, so my name is Rachel Davis Akbar on Facebook.
Okay, girl.
And I am Rhea Sunshine 123 on Instagram. My number is 510-493-5262. Please do call me. I just want to say really quick, I'm a therapist by trade. I'm a mental health professional and an international addiction specialist. And what I found was many people have panic attacks, anxiety, and depression because of their finance.
Yeah.
But I am looking to transition fully from the healthcare field. I've been doing that for over 12 years. So I'm going from healthcare now to wealth care. So
Healthcare to welfare.
Healthcare to welfare.
I like that.
Welfare.
Yeah, so definitely. And the reason why I'm so passionate about this information is because I always knew that the rich and the wealthy weren't better than me, but they just had better strategies and they had more opportunities. So when I sat down and I saw this presentation that was offered to me, I immediately joined this company. I immediately got licensed and I immediately jumped on this crusade. And so my husband and myself, we do have a Facebook page called Next Level Conversation, Level Up with the Akbars. And we do a lunchtime tea conversation every Wednesday at 12:30 to 1 o'clock, just 30 minutes. And we talk about the 5 F's: faith, family, finance, fitness, and fun. Okay. And we share those areas. So, jump on. We have on the page, those are recorded as well. And, I just appreciate everybody on this panel.
Thank you,
it doesn't matter if you get insurance from me or one of them. I just need you to get your families covered, take care of your business, and get your life. Because you know what? You're not going to be able to retire 30 to 40 years post-retirement, and you don't know what's going to come down the pike. So you want to definitely make sure that you're secure, that your family's covered, that you can retire by design and not by default. So thank you so much for having me, Ms. Samantha.
Okay, no problem. But I just want to make sure we have a millionaire mindset.
Yes, amen.
A millionaire mindset. Because once we start thinking like millionaires, we'll start talking like a millionaire. We'll start acting like millionaires, want to get that money.
Yeah.
And it's not just about getting the money, but when you get the money, what do you do with it?
Right.
Are you going to keep that information to yourself?
Right.
No, we all want to come up. I don't want to come up without my community.
Right.
I want us all to have the same information. And if I'm not going, you have a table full of people here. And when this table is not available, she has a team. She has a team. He's going to create his team. So that's what I see for you guys. So I thank God for you guys tuning in. Thanks for joining our podcast, Samantha Wise Words. And make sure, take a moment to follow me on YouTube, Samantha Wise, and or Facebook. But We love y'all.
Thank you,
We
guys.
appreciate
Thank
you guys. So thank
Stay
you for
safe.
joining.
Stay safe.
Yes, mask up. And we all was COVID tested.
Yes.
So that was one of the texts that I sent out just to kind of make sure that we stay in a safe environment. So it's our responsibility to make sure that we all stay.
Yes.
So happy Friday.
Thank you, guys.
Take care.
Stay safe.